This is a market review for January 28th, 2025. Today is Tuesday. We had consumer confidence at 10 o'clock a.m. Eastern time. Today we were bullish. As we can see, we closed bullish here. Bullish was my high time frame bias. I'll come back to what I actually ended up doing today. Yesterday we failed to take out this low, rejected off of it. So confirming that this is the low of the week, we played bullish today. So the rest of the week I'm looking to continue marching higher, take out these relative highs over here. Now on the hourly time frame, so I'll tell you where I was a little confused today. So like I mentioned, high time frame and bullish. Bearish Monday, rejection off of the low, especially with how significant of a drop it was. It was very telling that that was the low of the week and that price would be unlikely to continue lower. So obviously, like I mentioned previously, I would be looking for bullish price action throughout the rest of the week. However, London session, 2 o'clock to 7. We see here, London session starts playing bullish, takes out this high over here, and then reverses. Now, the reason that means something to me is usually when London reverses, New York continues. So my high time frame bias told me bullish. My low time frame told me bearish. So I was a little confused. But apart from that, on the hourly time frame, we have a fair value gap here that got reacted off of this candle wick, confirming it as a valid one. And then in the, early or late morning, it gets tapped here and then expanded off of that. AM session's sell side target looked to be this low, which was, a new daily low because we opened here. Took out this, and as you can see, didn't stay very long. So as we go down to the 15-minute, see again, London reversed after taking out this high over here, New York's high from yesterday, then cascaded lower, fair value up here, validated. So once we passed through it, I had a feeling we'd come back up to it here. Another thing that would point me to the bullish bias is that 830 usually spools in the opposite direction to fool uninformed money, which is exactly what it does. Played bearish, consolidated here, market opened, spiked down, spiked up. If you can see here, this like clustering of gray and a little bit of orange, that is today's new day opening gap. It's non-existent. But I thought I should put it there just to see how price reacts. And it kind of did start clustering around it a little bit, but once market opened, just took off and didn't really come back to it. London session started out bearish, take out slow, played higher, 15-minute here, which was used for the lunch reversal or the reversal, retrace. I don't know, lunch liquidity sweep. Then we played bullish again for the rest of lunch. PM session opened, algorithm kicked back in. We took sell side, filling in this 5-minute here, which I'll get to, and then expanded higher, taking out this liquidity here. SMT of the highs, we'll see on the lower time frame, expansion lower to end the day. Now, 5 minute here, we got 8 o'clock macro pushing us up, 15-minute inverse reaction, 8:30 spools in the direction to fool uninformed money, took out this low, and then didn't spend any time in reverse, closing inside of a new day opening gap from the 2nd of January. Then obviously we expanded higher. This right here is the macro, which could have been an entry here. I'll get back to my entry only for a minute. So we retraced here, filling in this 1 minute after this market structure shift. Yeah, I'll cover all that on one. Come up here, taking out these highs, retraced, consolidated after reaching the target until lunch, roughly. Took out this sell side, meaning we were going to target buy side, took out these highs, and this side over here during lunch, and the algorithm kicked back in. We're looking to continue our bullish move. So what did we do? We took out sell side first. And we continued higher, making out more liquidity over here. Had an SMT between NQ and ES up here. 1 minute fair value gap, expansion lower. You see this here, this fair value gap right there, that gap between those two candles. Like the wicks of those two candles gets validated here, which tells me that if price breaks below it, price is likely to come back up to it in respect. And then obviously it fell off the high and consolidated to close out the day. Now, the 1 minute, I'm not going to go through all that stuff, but let's start with is 1830. Consequent encroachment respect, immediately 8:30 opens and spools lower. Spools lower to, again, trick uninformed money. Now, this reversal here during London did create a bearish sentiment for the beginning of AM session. Now, in the past, it has also done this, but it has been more prolonged. So I was able to capitalize on. I don't think that I've ever seen a 15-minute continuation of the usual path of London's move continued into New York's for only 15 minutes. Usually it's at least till 10, maybe 10:30. But so this isn't. But knowing this, knowing that the high time frame, yesterday's low, Monday's low, very significant, it's likely to be the low of the week. That's one bullish bias. 2, 8:30 spools in the opposite direction to fool uninformed money. What does it do? Spools bearish. All right, that's number 2. Number 3, took out this low, spent no time, and immediately came back up out of it, taking out this high here. As soon as this crossed this, my mind should have switched to bullish as well because of that, as well as the high time frame bullish, as well as 8:30 spooling in the opposite direction. And if I'm going to be honest, my execution was more so relying on my trading plan than my gut. My gut told me we're playing bullish, but I stuck with it because if I didn't take a trade today, this one, I wouldn't have taken any because I would have left the markets. And I've been wanting to try to trade more and test out my model. And that's exactly what we did. Even though my gut was telling me we were playing bullish at this point, I still took it to gather more data from my model. So what I took was 1, during the macro. 2, we had an SMT at the time. Expansion lower, fair value up here. As soon as price came back up to it and hit it, I entered. And then obviously, as soon as this candle closed, my stop was above this candle. As soon as this candle body closed outside of this, I closed. Let me actually pull it up. You can see the rally gap entered right there. When price came back up into it, and then I closed right here when this candle closed. So not the best trade. My gut told me to take it into the bullish, but there was no SMT. And so for the purpose of gathering data for my trading plan, I took it anyways. Now the next predicament that we have here comes not much later than that. So, well, first we had an SMT of these lows right here, expansion higher, good, expansion higher, playable. This is playable. At this point, this 15-minute was valid. Between these two candles, it was valid. So if we extend that, boom, boom, this is good. Didn't go lower than this. I like that. Expansion didn't take out this high, came back down, tapped into it, consequent conversion, expanded higher. Failed to make it, and then obviously. So my problem here is we have two SMTs obviously up here. Yes, this high was higher than this one, and this one was higher than this one, just like this, but this was also higher than this. So according to my model, this would have been a good short right here. Why? SMT, expansion, entry right there, obviously wouldn't have worked. If I was bearish, at this point I definitely would not have been bearish, but for the purpose of seeing how complete I can view the markets, my I'll say hypothesis for the reason that this one, this SMT and this expansion worked was because this SMT here was pushing price higher. And if I saw price react off this once, I wouldn't have wanted to enter with how quickly and how aggressively price came off of this for value up here. It doesn't really signal too well for playing short. You might ask yourself though, why not this one? And the question is, I don't really know. I'm just trying to make sense of this myself to gain more, to see if I can see a pattern. So the reason why this first one didn't work, my guess, is because we had this sell side SMT. That's really all I have. Because it was during the macro. Technically, this wasn't, because here's 11:10. During the macro, I definitely would have liked to take this if I was interested in trading at this time, but I didn't. And if I did, it would have lost. But that just is another example of my model works if you have the right bias and if you have the right time. So price comes back down, takes out sell side here. Launch plays higher, taking out this liquidity over here. With this candle, small retrace. Expansion higher. Algorithm kicks back in at 130. Takes out the sell side because we want to continue the bullish move higher. React off this 5-minute as well as constant encroachment of new week opening gap. This right here, this new week opening gap is. Oh wait, no, that's not this week's new week opening gap. Never mind. Where is that? All the way up there. Here. Nice. So reacted off of constant encroachment, new week opening gap. Played off of fair value up here, expanded higher, chopped. Boom, here. ES made higher highs with this grouping than this one. So this is an SMT with, okay, first SMT, 2, fair value up here. Excuse me, thank you. respected here, this is probably what would have happened. I would have wanted to keep my high above here because this is kind of excessive. Don't need to stop that small. Would have kept it above here because this is a protected high. So that would have worked, but this one is safer in my opinion. Larger gap. Playing here, took out these lows, retraced, enter on this low, stop above this candle's high here, and then targeting new opening gap. Um, the reason this worked, one, because it was inside the 315 to 345 macro right here, and because this is the high of the day. And if we're bullish, price usually likes to fall off the high of the day at the end of the day, which would mean playing bearish for the next bit until market closes right here. So, like I said, beginning, looking to continue to play bullish. I think this is going to be the low of the week. This was the start of the bullish move of the week. Do I think we're going to reach this tomorrow? No, that's more Thursdays, in my opinion. Maybe Fridays as well. Definitely look to reach up into this. My goal for tomorrow is the low of this new going gap here, but then obviously to continue bullish for the rest of the week. But like always, let's see what London holds. Yeah, I'm trying to think of if there's anything else I want to cover. No, definitely an interesting day, an interesting morning, and something that I should revisit in a bit to see if I can make any more sense of it with my gained experience. But the good thing about it is my gut was correct. Gut told me once we reversed off that low, this low here, that we are no longer going to be playing bearish. And I should have listened. But I need to better distinguish what is my gut telling me from experience or my gut telling me from fear of being wrong. But that'll come with time. So this has been a market review for January 28th, 2025.